CNBC TV 18, celebrating 15 years of leadership.
Our top story tonight, it's a triumph for Finance Minister Arun Jaitley. Sources say the Centre and State Finance Minister have reached a consensus on the constitutional amendment bill to roll out the goods and services tax. Petroleum products likely to be kept out of the GST ambit. The bill will be tabled in the current session of Parliament.
RBI moves to give the infrastructure segment a boost, issues new guidelines for refinancing of loans to infrastructure and core sector projects that allow banks to flexibly structure and refinance long-term loans worth over 500 crore rupees.
Trade deficit for November comes in at an 18-month high of $16.86 billion as gold imports jump six-fold year-on-year. Exports fall to $25.96 billion.
I would think all the ingredients for a rate cut, I would think, are there.
I'm sure they will act at the right.
The clamour for RBI to cut rates gets louder. Veteran banker KV Kamath says it's time for the RBI to act given easing inflation and a weak economy. Jayant Sinha also places his faith in the RBI as wholesale price inflation falls to zero in November.
Get ready to pay 2 rupees less for every litre of petrol or diesel starting midnight tonight. Oil companies slash prices as global crude prices continue to tumble.
SpiceJet fails to put forth a new payment proposal before the DGCA. No headway on finding a new investor either. CFO says survival plan is a work in progress. Meanwhile, Vistara readies for a takeoff as the airline gets the air operator's permit.
99% of the shareholders are not tendering, are not ready. The delisting should happen. The delisting guideline has not even been announced.
Market regulator SEBI does a U-turn, says it's willing to relook at the delisting guidelines if there are difficulties after implementation.
Sunpharma's $4 billion merger acquisition of Ranbaxy is close to getting the green signal from the competition authority in the US. Sources say FTC approval will come in as soon as one product is sold and sale talks are in advanced stages.
The whole idea is to get more and more money into railways. Railways need investment.
Newly inducted Railways Minister Suresh Prabhu says his ministry working on multiple new avenues to generate revenue via land monetization to revive the railways. Today, the first day of the week, saw indices struggle valiantly to make up for a very poor opening. By the close of trade, both the Nifty and the Sensex managed to erase most of the early losses, supported by the financial space. Sensex closed flat at 27,319, down by just about 31 points. A similar story played out for the Nifty, then managed to close above 8,200, and for the day, it was down by only 5 points. Mid-caps underperformed the frontliners, the index closing down 0.5%. From the equity markets to the currency markets, we don't have good news for you from there. The rupee closed at a fresh 11.5-month low of 62.94 today. But Surbi, you have the big breaking news story of the day.
And boy, is it going to make Team Modi extremely happy, because those are the indications that one is actually picking up. The biggest story of the evening and of course of the day, sources are telling us that Finance Minister Arun Jaitley has been successful in breaking the deadlock on GST. Yes, you heard it. The centre and the states have reached a consensus on the constitutional amendment bill on the goods and services tax. This after the Finance Minister's meeting with state FMs. We will get you more details on the story in a bit, but let's for now just hear out the GST panel chairman and other finance ministers who were at this extremely crucial meeting.
The matter was discussed elaborately. The discussions are moving in a positive direction.
So will the bill come to the parliament now?
That is for the government of India to decide.
But are you people in favor of
close to consensus?
You see, they have nothing. We have nothing. EC has nothing to do with the introduction of the bill. Our main job is to evolve a consensus. We are working on that. So far as the introduction of the bill is concerned, that is for government of India to do.
The discussions were held in a very positive environment. And at this point of time, I can only say that we moved ahead on these issues also.
So will petrol products be part of the GST or not? Has the centre decided to give in to your demand of keeping it outside GST, at least for the first few years?
We have shared our concerns and our points of view, and I can only say at this point of time that the discussions were held in a very cordial environment, and we have moved few steps forward.
So will the amendment will be presented in this session of Parliament?
That is for the government of India to decide.
So there you go, the GST panel chief as well as the finance minister of Haryana telling you that it seems as if a consensus has been reached on the goods and services tax. Sapna Das has had a very long day tracking those meetings which went into many, many hours, now joining us. So Sapna, you know, the GST panel chief saying it's up to the government of India when the bill should be introduced in Parliament. But all indications seem to be pointing to the fact that in this session of Parliament, perhaps we are going to see Arun Jaitley tabling the constitutional amendment bill.
Absolutely, there's a high possibility because no further meetings will be required, at least of the smaller committee of state finance ministers that had been set up to relook the draft constitutional amendment bill that was submitted by the centre to them. No further meetings between those state FMs and the union finance minister will be needed. More or less a consensus has been reached. Top government sources have indicated that very clearly. So now it's just a matter of time when the government actually goes to the cabinet for a nod on the bill and is ready with the bill, because 23rd is the last state of Parliament. Everybody is aware about that. So it's a bit of a race against time, but they're very keen to put it out, and that's where all the clear signals are pointing towards. In terms of the issues, it's more or less certain that petroleum products will be kept out of GST. The states were very, very adamant on this front. That demand is most likely to be accepted, or rather has been accepted, as discussed earlier also and indicated earlier, as well as reported by CNBC TV 18. That's going to be at a nil rate. Probably that mechanism will continue, that arrangement will continue for 3 to 5 years, after which the government will take a call as to what needs to be done, because constitutional amendment bills can't be done very frequently. So that's one. That was a big issue, not just with those couple of states, you know, which are oil rich, but also almost all the states, because around 1/3 of the annual revenues of most of the states come from petroleum products. So that's one. Entry tax was a smaller issue, but nevertheless an important one. Here the states have have more or less agreed to kind of subsume it into GST. So that stands resolved. The third element is the compensation structure. Well, here the indication is not very clear whether the government is actually coming out with a constitutional provision, because that is something the centre would not like to commit. It becomes a bit risky because, as just indicated, you can't have constitutional amendments very regularly. So in case the compensation amount changes, it becomes difficult for the government to actually go ahead and keep changing the bill also at the state governments and at the parliament level. However, there are indications that probably the centre might even agree to that. Nevertheless, even if they don't, the fact is that the centre stands committed to compensating states on any kind of loss arising out of GST. The finance minister himself is very, very clear on that front, so no worries on that. Just remains to be seen that ultimately whether it will be a central legislation, probably a GST bill, or the constitutional provision.
Thanks, Sapna, for joining us with those details. That's the big headline, the consensus being reached by the states and the centre to make goods and services tax a reality by the 1st of April 2016. And like we told you first on CNBC TV 18, it seems as the petroleum products will be in the GST ambit, but initially with the 0% rate, so states will be free to earn revenues directly and charge what they choose. Also, something else we had picked up from very highly placed government sources is that the initial GST rate is likely to be very, very high, maybe even 20% plus, and be gradually reduced over the years. And here's the other big story of the day. RBI has moved to give India's core sector and infrastructure companies a boost. It has issued new, easier rules for the financial restructuring of loans given to these sectors. Natha Venkatesh now joining us with that story. Natha, what exactly has the RBI notified today?
Well, first let me just give you a bit of a backdrop. The Reserve Bank had already allowed that for new infrastructure loans, the banks don't have to give a one-shot loan like 8-year or 10-year loan as they do now. If it's a 25-year concession period, they can just give a 5-year loan and reset it at 5 years, maybe sell it off to other banks, maybe sell it off to some new buyers, or restructure it. Now they have actually, after a lot of demand from banks, allowed it for existing projects as well. But which existing projects? The banks actually need it for those that are not getting off the ground. But where it has come is only where projects have started commercial operations. So that actually would be a relief to those who don't want banks to iron out bad loans by evergreening them. But it is not very good news for those projects that are really stuck. As well, the other conditions are that this is applicable only for loans over 500 crore. They must belong to that 8 core sector areas, which is well defined. And this restructuring is available only once in the life of a loan. And the fresh term of the loan should be not more than 85% of the concession period of the loan. So if it's a 20-year concession period, the tenure of the loan cannot be more than 17 years. So these were all expected rules. And you can also have bullet repayment. That is, at the end of 5 years, they pay a whole bulk back rather than every year. And the NPV, the net present value of the loans, must be the same before and after restructuring. That is, the banks must not incur any loss.
Right, that was Lata there with the fine print. For more details and some analysis of really how much of a help this is going to be, we have with us SBI Chairman Arun Jaitley. Ma'am, thanks so much for taking this call and joining us this evening. So yes, a relief, but lots of riders. The ticket size of the loan has to be 500 crores. The loan, of course, has to be a standard one, and only projects which are currently ongoing, which have already taken off the ground. So to what extent do you think is this going to be a relief?
It will definitely be a relief. We were wanting it for existing projects. That has been permitted. So definitely, this will enable us to better match the cash flows with the repayments. So to that extent, it is definitely a relief. The fact that, it has been for an infrastructure and core sector, that is how it was even in the earlier circular. So to that extent, that is really no surprise. Regarding projects that have not yet achieved commercial operations, of course, once they do achieve commercial operations, maybe we can bring them under this provision. The only problem is, projects where they are stuck. There is a Reserve Bank circular of August 14, where they had said financing of cost overruns more than 10% will render the project as restructured. Now, that is something that we have been again requesting RBI that they need to relax, because 10% is an arbitrary number, and quite often the cost overruns are on account of time overruns, and time overruns are on account of the late approvals received or land acquisition issues, etc. So some amount of relief has been granted, and that is welcome.
But ma'am, as you said that, for projects which are already stuck, some of the other rules like this 10% cost overrun, that have not yet been simplified. Can you give us a sense, when we're talking about core sector infrastructure projects, whether it's power or cement or steel or any of the core sector projects, to what extent, even if there's a rough ratio to understand, what percentage of these projects might actually find easier refinancing with these norms now?
It's very difficult for me to say what percentage, because as you can understand, there are a number of things over there that has to actually be looked at. We have to look at maintaining NPV, net present value. So that would mean that either we would need to raise interest rates, or more equity will have to be bought up front. So we'll have to see how that is to be handled. Secondly, we have to ensure the viability. And again, that has to be, rechecked by the evaluation committee. So all of these checks and balances are there. And therefore, we need to go through all of these in order to ensure that, we get these projects refinanced. But to give you a number straight away, I really don't have it ready. I won't be able to give that.
Would these norms, ma'am, at all have a bearing on the current ratios? Perhaps projects which were running into a little bit of rough weather, projects which have already been commissioned but were running into some kind of financial rough weather, now have a new window thanks to the new norms. Will it have at all a bearing on the financials in the coming quarters in terms of the overall restructuring that banks are reporting, including, of course, State Bank of India?
Again, very difficult to say, because, the coming quarter means we are looking at December quarter, it is only 15 days left. So I don't see how it is going to impact anything during this quarter. If at all, something might come in the next quarter. And we'll have to see how it is looked at. Basically, we would like to think that this is refinancing rather than restructuring. So we need to look at it from that light.
All right. Thanks so much, ma'am, for joining us and giving us your views on what has been announced. But well, that wasn't all. There's been lots of other macroeconomic action today. Lata, let's come back to you. Do take us through all the big data points that have been coming in. The trade deficit, which of course widened for November to almost $17 billion. What's your analysis?
Trade numbers are very bad numbers. 17 billion was the kind of numbers we had just before, all those big tapering, post-tapering run on the rupee came. We used to do 17 billion in May of 2013, in April of 2013. These are bad numbers. This is something that will scare the Reserve Bank. A trade deficit of 17 billion. You know, last month it was 13 billion. The month before it was 14 billion, and the Reserve Bank was very worried about that 14 billion number. 17 billion is definitely going to scare them. The big culprit is actually the fall in exports. They've fallen to 25.96 billion, and last month they were 26 billion, and that itself was a fall of 10% from the September numbers, which were 29 billion. So we've been falling every month, and clearly this is for two reasons. One, the rupee is not depreciating like other currencies are depreciating. Today, of course, it's 11.5-month low, but for the longest time, currencies across the emerging market space have depreciated. The rupee has not depreciated. And secondly, there is a global slowdown. Let's face it, all the commodity countries are not able to import the kind of, two-wheelers or auto parts or chemicals that they used to import from us. So there is clearly an impact on the exports because of that. That is a big source of worry. We can't correct global slowdown, but we perhaps will try and correct our currency. The other big factor, of course, is gold. Gold imports have risen to 5.6 billion compared to 4.8 billion in October, 3.7 billion in September, and less than 2 billion in the preceding months. Very sharp increase in gold imports. I think that now there will be a rethink on the gold rules.
Very disappointing trade deficit data coming in there at an 18-month high. Thanks, Alata, for joining us with that. Well, that's disappointing news, but we also have some good news today on the macroeconomic front. India's wholesale inflation has slipped to zero. Yes, you've heard it right. It's slipped to zero. It's a 5-year low as far as this November reading goes. The fall driven by negative growth in primary articles, which in turn was led by the fall in fuel and power inflation. And so be all of this likely to increase the clamor for a rate cut.
And we're already hearing lots of those voices out there. In fact, many experts are saying that a lower inflation number, along with the fact that twin deficits seem to be under control, could prompt the RBI to move on rate cuts, especially since industry has contracted by 4.2% in terms of the IIP number that we got last week, and it seems is in dire need for a booster dose.
Clearly now, the twin deficits are under control, and I don't think by any stretch of imagination we can say that we have a worry that is imminent on that front. I think clearly inflation is also on a downward trend, and now you have growth which is also negative, which ought not to have been. So I would think all the ingredients for a rate cut, I would think, are there. I think the call is entirely the Reserve Banks. From past experience, in my past experience really, I like to draw what happened in 2001, 2002. If the economy has to really get back to a 10% trajectory, I think the rate cut will have to be much deeper than what we have been talking about.
I think the trends that we are seeing in inflation right now are indicative of both the fact that a number of commodity prices are coming down sharply, as you've seen obviously in the case of oil, but certainly in the case of many other commodities such as iron ore, for instance, you're seeing very sharp price declines, and obviously global growth also has been quite weak. As a result of that, you would expect inflation not just in India but around the world to be moderating, which in fact it is. So we obviously have to see how the RBI now deals with all of these factors. They of course are very vigilant in these matters. They're taking into account all of these, and I'm sure they will act at the right time.
So all eyes now on the RBI governor. Is he going to surprise the street? Will we see a rate cut before February's monetary policy meet? Now, the sharp decline in fuel prices has been the key driving factor for inflation coming in at zero, and there's more reason for inflation to cool off. Petrol and diesel prices have been cut by 2 rupees a litre. These low prices will come into effect starting midnight tonight. IOC says the cut comes on the back of continued fall in tumbling crude oil prices globally, as well as the appreciation of the rupee versus the dollar, but sources telling me, Surbhi, that the companies have failed to pass on the entire benefit to the consumers, that they've kept a cushion of almost 1 rupee a litre, but the finance minister will not be hiking excise duties as of now.
Exactly
he
what
will
I
not
was
be doing, so there will be no third round.
Yeah, that would be quite something, a third excise hike on petrol products in a matter of just 1.5 months or so. All right, that's diesel and petrol news for you. Let's quickly move on to the latest that's taking place in the SpiceJet saga. CNBC TV18 learns that in its meeting with the aviation regulator DGCA, the SpiceJet management has not been able to put any new proposal on the table. The airline has also been unable to share information with the DGCA on bringing in new investors. Sindhu Bhattacharya now joins us for more details. Sindhu, what's going on?
Well, Nantara, it seems SpiceJet has got itself a breather of at least a week, maybe 10 days. Our sources are telling us that between the Civil Aviation Ministry, Ministry of Petroleum, Finance Ministry and the PMO, some sort of a decision or some sort of an understanding has been reached where the Airports Authority, to which SpiceJet owed about 200 crore or a little more, has been asked to not put the airline on cash and carry. We are also hearing that oil companies have also been asked to go a little easy on SpiceJet so that the airline is not immediately put on cash and carry and not denied fuel. There are unconfirmed reports that the airline has sought some sort of a soft loan from the government to tide over the present crisis. What is very clear is that there is no investor that SpiceJet is talking of now. DGCA sources earlier today said there is no investor that the airline is talking of now. This only leads us to the question if the government is actually going to step in by providing financial monetary help to the airline, even if it is a guarantee for any sort of loan, or if the government is actually going to ask oil companies and Airports Authority to help the airline. It raises a very pertinent question. Why did the government not do this for Kingfisher, which went down 2 years back? And will the government similarly help all private airlines except one? All are mired in deep losses. Back to you. Is that what you're saying, sir?
It's still work in progress.
So what happens to flights tomorrow if there is no
They're all flying. They're all flying.
So how many flights are you doing now?
I won't know the details.
Well, this is a story far from over. We're perhaps going to see new twists and turns with every passing day. Let's get to some more news from the aviation space. Even as SpiceJet going through these turbulent times, Vistara, the joint venture between the Tatas and Singapore Airlines, all set to take off. Vistara has received the air operator permit today from the aviation regulator DGCA. That permit, which is the final step in the compliance process for any company to start an airline, allows Vistara to begin commercial operations in India. CNBC TV18 in fact spoke to the CEO of Vistara just a few days back. He said the airline is expecting a green signal quite soon.
We were hoping to be able to launch Vistara on 15 October, being the 82nd anniversary of the first Tata Airlines flight.
Yeah.
It would have been good, for us to launch on that day itself. But at last, we were informed that we had to make some changes to our manual submission. So the changes have come about because the DGCA will soon be undergoing the FAA review. They were downgraded in January this year. And the review will be taking place very soon, and some changes had to be made in their certification process and the manuals. And we can understand why, because actually we are also hopeful and would like to see the Indian civil aviation get its rating restored to Category 1.
Absolutely.
Right? So while it was a setback, to us a setback, but we can understand. We like to see that at the end of the day the civil aviation gets its rating restored. So we duly comply with the changes, and we have made all the changes. We have submitted and it's been accepted. Now we are just waiting for the final hurdle.
That's Vistara getting ready for its takeoff. Moving on, market regulator SEBI seems to have done a U-turn on delisting norms. SEBI chairman UK Sinha today said that the regulator is willing to relook at delisting norms if there are difficulties post-implementation. This after Sinha on the 22nd of last month hit out at suggestions that the norms need to be eased.
Is the argument being made from the other side that even if 99% of the shareholders are not tendering, are not ready, the delisting should happen? I'm sure if you apply your mind, you will find that this is not a correct demand. And we have put it 25%. We have not said 50%, we have not said 51%. Again, this 25% has been qualified. It has been qualified that 25% of the dematted shareholders.
We have received a large number of comments and representations on one particular aspect of the delisting guideline. The delisting guideline has not even been announced. It is not even in place. So I said, let us see how it pans out. What is the experience? And if there are any difficulties, SEBI will always be looking at problems as a dynamic organization.
Yes, that's what the market regulator had to say as far as the delisting norms go. Let's go across to Sujit Mangat to get more perspective. Sujit, you know, after that last SEBI board meet, this is what the industry stakeholders had to say. The new rules make delisting almost unrealistic.
That's right. After the last SEBI board meeting, the bankers were of the view that the new rules virtually makes delisting unrealistic, and it basically gives an end to the entire delisting, because over a period of time, what the bankers have found is that the number of shareholders who participate in delisting offers are very minuscule, and asking for conditions like 25% of the public shareholders to vote or to tender in a delisting offer is virtually saying that, you know, you can't delist. And that's why a lot of representations have been made to SEBI. Remember, SEBI is yet to notify the delisting regulations, but what we understand from what Mr. Sinha has said, that they are willing to relook at it, given the fact that there's so much objection which has been raised to that one clause of 25% public shareholders. Now, what Mr. Sinha has very categorically stated is that he wants to see how it pans out, and if there is difficulties, then he's willing to relook at it, because SEBI is a dynamic organization and will come back in case of there is difficulties. But for now, this regulation seems to be going ahead. We are awaiting the notification of this regulation, and we need to see what exactly are the exact words in the notification to take this new deregulation going forward. So bankers are still divided on the fact that the only hope they have is that SEBI realizes that this is going to be a retrograde step, and so SEBI may come out with some easing of this regulation as far as delisting is concerned. Nantara?
The bankers should be happy to, at least, or the market regulators open to the idea of easing the delisting norms. With that, we have to wrap this edition of India Business Hour. Thanks for watching.
Thank you for being with us.
CNBC TV 18, celebrating 15 years of leadership.